Welcome back, traders. I hope you're having a great day. Today we're back with another important update on LabCoin, and there are some interesting developments taking place on the chart that every trader should be watching closely. If you missed our previous analysis, I highly recommend checking it out because everything we discussed in that video is still playing an important role in today's market structure. We have been following this setup for several weeks, and now the market is finally beginning to show signs of life. So let's break everything down step by step and discuss what could happen next. For a long time, LAB remained trapped inside a slow consolidation range. During that period, many traders became impatient because price wasn't making any significant moves. Some investors even assumed the project had lost momentum. However, experienced traders understand that markets rarely move in a straight line. Strong trends are usually built after periods of accumulation or consolidation. These quiet phases often create the foundation for the next major move. That is exactly what appears to have happened here. Over the last few trading sessions, LAB has finally started showing strong buying pressure. Buyers stepped into the market aggressively and pushed price from roughly 11 cents toward the 20-cent area. This is a very encouraging sign because it confirms that demand is beginning to return. Even though the recent rally looks exciting, it does not automatically mean that the market has entered a full bullish trend. One of the biggest mistakes traders make is chasing price after seeing one strong green candle. Professional traders don't buy because of excitement. They buy because their trading plan tells them to. That is why patience remains our biggest advantage. Instead of reacting emotionally, we continue following the same strategy that we discussed in previous videos. Our main focus is still the major Fibonacci resistance level around 90 cents. Why is this level so important? Because throughout market history, Fibonacci levels have repeatedly acted as areas where large buyers and sellers become active. These levels often determine whether a trend continues or completely reverses. That is why smart money pays close attention whenever price approaches major Fibonacci resistance. Right now, LAB has shown impressive recovery from its recent lows, but price is still a long distance away from that critical resistance zone. Until price actually reaches that area, there is no reason to predict a breakout or a rejection. Instead, we simply wait. Remember, trading is not about predicting every move. Trading is about reacting when confirmation appears. Now let's discuss the first possible scenario. Suppose LAB continues climbing over the coming days and eventually reaches our key Fibonacci resistance around 90 cents. At that point, we will not immediately enter a trade. Instead, we will carefully watch how price reacts. If sellers become aggressive and we see strong bearish confirmation, such as a bearish engulfing candle, shooting star, rejection wick, or another clear reversal signal, that would suggest buyers are losing momentum. In that situation, the Fibonacci level would once again prove itself as strong resistance. If that happens, we could begin looking for short selling opportunities with an initial downside target around 9 cents. This would represent a significant correction from the resistance zone. However, confirmation is absolutely necessary. Never enter a trade simply because price reaches resistance. Wait for the market to confirm your idea. Confirmation always comes before execution. Now let's look at the second scenario. Markets don't always respect resistance forever. Sometimes buyers become so strong that they completely absorb selling pressure. If LAB manages to break above the 90-cent Fibonacci resistance with strong volume and momentum, that would completely change the technical picture. Resistance would then have the opportunity to become new support. But even then, we still don't chase the breakout. Instead, we wait patiently for price to return and retest the broken level. This retest is extremely important because it tells us whether buyers truly control the market. If the retest holds successfully and buyers defend the new support, that would provide a much higher probability buying opportunity. In that case, our next major upside target would be around $1.90. That represents an extremely attractive reward compared to the potential risk. Again, notice something important. We are not buying because price broke resistance. We are buying only after confirmation. This simple rule protects traders from countless false breakouts. False breakouts happen every week in cryptocurrency markets. Price breaks resistance, everyone rushes into the trade. Then price suddenly reverses and traps late buyers. By waiting for confirmation and a successful retest, we avoid many unnecessary losses. Risk management is just as important as technical analysis. Even the best trading setup can fail. That is why every professional trader protects capital first. Never risk money that you cannot afford to lose. Always use proper position sizing. Always place a logical stop loss. And never allow emotions to control your trading decisions. Discipline will always outperform excitement in the long run. Looking at the broader market structure, LAB has definitely improved compared to where it was trading just a few weeks ago. The recent buying pressure shows that investors are becoming more interested again. Momentum is improving. Volume is gradually increasing. Confidence is returning. These are all positive signs. However, none of them remove the importance of waiting for confirmation at our major Fibonacci level. The market still needs to prove itself. As traders, we don't get paid for making predictions. We get paid for following our trading plan consistently. That is exactly what we intend to do. So let's summarize today's analysis. Lab has finally broken out of its long consolidation phase, and buyers have pushed price from approximately 11 cents toward 20 cents. While this is certainly encouraging, our overall trading plan remains unchanged. The key Fibonacci resistance, around 90 cents, is still the most important level on the chart. If price reaches that level and forms strong bearish confirmation, we will begin looking for selling opportunities targeting approximately 9 cents. On the other hand, if buyers successfully break above 90 cents, we will patiently wait for a clean retest of the breakout. If that retest holds as support, we will then look for buying opportunities with an upside target around $1.90. Until one of these scenarios plays out, patience remains our greatest advantage. Remember, successful trading is not about trading every day. It's about waiting for the highest probability opportunities. The best traders are often the most patient traders. Now, I want to hear from you. Do you believe sellers will defend the 90-cent Fibonacci resistance and send LAB back toward 9 cents? Or do you think buyers are strong enough to break above resistance and start a massive rally toward $1.90? Let me know your opinion in the comments below because I'd love to hear what you're seeing on the charts. If you enjoyed today's analysis and want more professional crypto market updates, technical analysis, and high probability trade setups, make sure to like this video, subscribe to the channel, and turn on notifications so you never miss our latest market analysis. And if you're looking for more detailed trade setups, exclusive market insights, and premium crypto signals, be sure to join our VIP trading community using the link in the description below. Thank you so much for watching. Stay patient.